So this is the wrap up for the live market open for Friday, February 26th. Happy Friday, everybody. The mood markets are certainly ready for the weekend. We have a better market mood in general. Let's see if this continues. It's never a one-way street. Oil is generally on the upside. Stocks are doing okay. G20 summit begins. Don't expect too much. I mean, expect a lot of noise, but no action. For me, the big shift is that the euro joined the risk camp. So it's moving more with commodity currencies, less with the yen, okay? Again, these correlations don't last forever. Everything changes all the time, but this is the current situation. Euro dollar is trading very, very nicely in a very well-defined range. It doesn't happen every day. This is usually a much more messy currency pair. So current range 109.60 to 110.70. 110.70 is very, very strong resistance, as it was demonstrated just now. 109.60 was resistance in the past, now works as support. Okay, we have inflation figures from Germany and we had weak data from Spain. But of course, the focus will shift to the United States. In the pound, we had it cable made a small move above 140. Still hesitating, still too much talk of a Brexit, of Britain leaving the EU. Support 139.60, high resistance 140.50, 141.25, lower support 138.80. Dollar yen, when things look good, you sell the yen. The yen is the number one safe haven currency. 113.20, 113.25, I would say, is resistance. Support, clear support, a double bottom there at 111. High resistance at 114.25. We had inflation figures from Japan. They showed ongoing mediocre rise in prices, far from the Bank of Japan's target. But of course, also here the focus moves to the United States. The Canadian dollar, a big winner, enjoying the rise in oil prices and not falling too much when oil prices are falling. It broke below support at 136.20. Next level to watch is 134.60, which was very, very tough resistance for a very long time. Okay, so I have a stronger Canadian dollar in general, showing a lot of resilience. Aussie dollar, well, now battling in the separator of ranges, 72.20, further support 71.40 and 70.50, higher resistance 72.80. 72.20 is not so strong as it used to be. Currently, the pair is only just holding above it. Kiwi dollar, here we have a clearer trend. 67.50 is the current level, above support at 67.40. The next level is 67.90, followed by 69. Okay. Support, lower support at 65.50. We had a trade in this range of 65.50 to 67 for a very, very long time. Okay, events for today in the wrap up. From now, we already have figures from Saxony, which were poor. We have German inflation figures. The final release is at 1 GMT. These are preliminary numbers for February. Yesterday, we had the final Eurozone figures for January. Today, we have the preliminary German figures for February. On Monday, we'll have the preliminary Eurozone figures for February. Anyway, Spanish CPI came out worse than expected at minus 0.9. Adds to the chances, of course, that the ECB will act on March 10th. The countdown continues. Anyway, the big event for today is at 1:30 GMT. That's the second release of US GDP. We begin our live coverage at 1:15 GMT, 15 minutes before the event. Dale Pinkert, Mauricio Curry, and myself, you're all welcome to join. Together with that, a small downgrade there is expected from 0.7 to 0.4. Annualized, very, very poor growth. We all expect US growth to rebound in the first quarter of 2016, but the fourth quarter was really bad. Let's see how bad it really was. And we have also another figure to watch. We have a big bulk of US figures, but an important one is the Fed favorite Core PCE price index. Okay. I also have the revision of consumer sentiment. It's the second release, therefore less important. And we have speeches from Powell and from Brainard, which is a dove. I think her speech is more important than the one by Powell. Anyway, GDP remains the main event. Okay, and all in all, we're still in a better market mood, thanks in part to yesterday's durable goods orders. They disappointed so many times in 2015, and they finally jumped so much in the headline and the core figures. So it's finally all good. What I forgot to mention regarding the Kiwi is that it enjoyed the positive trade bounce, which was a very good surprise over there. Okay, that's it for the wrap up for today. We'll soon begin the preview. Let's see quickly. Pairs to watch for today. Regular question by Jack. So I think euro-dollar because of the mix of the German inflation figures and US GDP. But also I would be watching the Canadian dollar because of oil prices. And let's see if they're now sort of they're at the top of the range, and let's see if this continues. And then also I would mention the British pound, because the British pound had a terrible week because of the Brexit talks. It fell to the lowest levels since March 2009, since the last time that the Bank of England changed its interest rates. All right, so we're let's see how it closes the week. If with the current trend, which is a bit higher, which was a bit sort of a sweet end, some comforting end to a terrible week, or if it resumes its falls and closes on even lower ground. So I think it'll be very vulnerable, very political week in the UK. Okay.